everybody. Welcome to the December 2025 Economic and Market Update presented by Commonwealth Financial Network. My name is Chris Fasciano, and I am Commonwealth's Chief Market Strategist. November was a volatile month for markets, but it ended on a strong note. After declines early in the month due to concerns about technology stocks and the AI boom, a late-month rebound brought the S&P 500 and Dow Jones Industrial Average to positive territory. The S&P and Dow were up slightly for the month, between 0.25% each. The technology-heavy Nasdaq Composite, however, ended the month down 1.45%, despite the Thanksgiving week rally. International equity markets were also mixed. Despite the turbulence during the month, stock market fundamentals showed continued improvement. We just finished third quarter earnings season, and the results were better than expected. Third quarter earnings growth for the S&P 500 came in at 13.4%, which was well above analyst estimates of 7.9%. Over the long run, fundamentals drive performance, so this was an encouraging result for investors. Bonds were up as well in November, driven by falling interest rates. The falling interest rates were driven by rising expectations for a rate cut at the Fed's December meeting. Markets are pricing in a roughly 90% chance of a cut, up from about 65% at the start of November. If the Fed does end up cutting rates, it would mark the third consecutive reduction following the cuts at their September and October meetings. Turning to the economy, data releases were still limited due to the ongoing impact of the government shutdown. With that being said, there were a handful of important updates that were announced. The delayed September employment report was released mid-month and showed a rebound in hiring in September, following modest job losses in August. The unemployment rate rose to 4.4%, which marks the highest level since late 2021 and signals headwinds for the job market. Consumers appear to be noticing these headwinds as consumer confidence continued to falter in November. The Conference Board's Consumer Confidence Index fell by more than expected in November, which brought confidence to a 7-month low. This was driven by rising concerns about the present economic situation, as well as souring expectations for the future. Historically, consumer confidence has been a driver of consumer spending, so this is an important area to keep an eye on in the months ahead. Aside from the weakening economic backdrop, markets face a number of other risks that should be monitored. Domestically, political risks remain front and center, as shown by the continued impact from the recent government shutdown. Investors and economists are still waiting for key data releases that were delayed during the shutdown and dealing with the uncertainty created by these delays. Foreign risks remain as well, as shown by the ongoing conflicts in Europe and the Middle East. Looking forward, the backdrop for markets remains supportive despite the risks. Market fundamentals remain strong, with healthy earnings growth and solid expectations. Monetary policy remains supportive, and another potential rate cut in December would be a further tailwind for investors. And the impact from the shutdown is set to fade as we get more information in the weeks ahead. All in all, the most likely path forward is for further economic growth and market appreciation as we head into the end of the year. That's it for this month's update. I'll be back next month to walk through whatever the markets throw our way. Take care, and thanks as always for watching.